The Rebel Capitalist Show.
Another thing that I wanted to talk about is the central banks and their move towards potentially a government-sponsored cryptocurrency or digital currency.
Yep.
And here in the United States, I think what's going to happen is the Fed will come out. I think we've talked about this, where you have an app and they give you the UBI directly to your app. But more importantly, to do that transfer mechanism, we would all have a bank account at the Fed, just like the commercial banks, where they could take and create the bank reserves. That's really the only thing they can do. And then they deposit those bank reserves directly into your bank account. And then you can spend those bank reserves just like you can normal dollars or Aussie dollars that are in your checking account right now, just with you just have the app and you swipe it at Starbucks or whatever. And so then what's happening is they're taking bank reserves and they're turning them into legal tender. And that's, if you look at all the work that Brent Johnson's done and Dr. Lacey Hunt, that's kind of the line in the sand for those guys when they go from being more in the deflationist camp to the inflation camp, or potentially even hyperinflation, when you can start using bank reserves as legal tender. That sounds kind of weird to a lot of people because they assume that the central bank, when they create these bank reserves, well, that's money. But what they don't realize is they can print all those bank reserves they want, and it's still just, all it does really is add balance sheet capacity to the banking system. And then there needs to be, on the supply side, willingness to lend, and on the demand side, there needs to be a willingness to take out additional debt. But I think that, from a privacy standpoint, there are a lot of issues there from a standpoint of creating more money supply, broad money, and then also velocity. And I know you've given this a lot of thought, so I'd like to get your opinion on this, not only in the United States, but maybe more specifically in Australia.
Well, there's a few interesting observations. Let me start at the end of the story. Today, they've just announced that they're going to invest in additional digital facilities. This is the government, right? So that they can use basically a digital face image by way of ID, right? And that's going to be rolled out more broadly across Australia, right? Now, it doesn't take much to actually think, hang on a moment. So they're going to actually use face recognition as a way to start identifying people. Access to government services is where it's going to start. That's a big deal, right? Because now you've suddenly got an additional direct ability to be able to identify people and associate, a digital profile.
What's their argument for that? Like, what's wrong with a driver's license? Hasn't that worked for quite a while?
We've had driver's license and all sorts of things. They're basically saying we can consolidate lots of information into one database, which will be more efficient. We'll be able to provide better access to government services. Sure. But it also means that you're going to be much more trackable. I just think of China, right? What China does is to actually have all these cameras around the place, and they can pretty much track everybody. The second point, so that's a big concern to me. I think that's a big red flag, but it looks as though that's what they want to advocate. The second point is that if you think about digital currencies, the Reserve Bank published a paper the other day on what they're thinking about with regard to central bank digital currencies. And they were pretty much sitting on the fence saying, well, there's a few developments around the world, et cetera. But there were two observations. The first observation is they made a sort of oblique reference to once, we go into negative interest rates, potentially, a digital currency can be quite helpful in terms of managing the issue. Otherwise, of course, people just take money out of the banks and, the negative rates don't work. Now, they did it obliquely. They referred to research relating to it. But the fact they mention it in this paper, I think is very significant. And that's my second point. I think this digital evolution that we're talking about is directly connected to potential of negative interest rates, controlling access to money and cash, because without it, and there was a paper last year from the IMF saying, global financial crisis, they took rates down, 4%, 5% to be able to actually create stimulus. Can't do that now because rates are pretty much at zero, right? But if you can take rates negative, you can get the same bang for your buck. But to do that, you've got to stop people being able to whip cash out of the system, because if they just hold cash out of the system, it won't work. So that now associate that with digital and suddenly that. Third point is, you're right. you can create massive amounts of liquidity through the banking system, and you can, throw money there. But if it's not actually going into the real economy, it has no impact. And that's one of the reasons why there's a big debate about inflation versus deflation. The only way to actually get money into the real economy is to give it more directly to people who can spend it, which is, normal people, right? And frankly, a lot of the stimulus so far has not been that effective. Now, in Australia, we've had JobKeeper and JobSeeker, which was a government pool of funds, huge liquidity. In fact, the liquidity was equivalent to more than 20% of GDP last quarter. But of course, they're having to pay for that now. They're ratcheting it down. So the question is, will there be an alternative mechanism to be able to target flow of funds to end consumers for them to use it? And if you're going to do that, then obviously digital is the way to go. And I guess what you could say that this is, the latest incarnation of helicopter money, isn't it?
Right. Yeah, exactly. And do you think that we could get to a point that if the general population has accounts at the central bank, just like the primary dealer banks and the commercial banks have now, and if they were using those bank reserves or the creation of bank reserves for helicopter money, let's call it, do you think we'd also transition into this world where you're getting your home loan or your car loan from the central bank and not the local retail bank? And if that's the case, what are the lending standards then? Because theoretically, the central bank can take an infinite haircut. And so then, do we still have lending standards based on credit scores, or now all of a sudden are lending standards based on a social score?
Well, that of course takes you to where China is, right? Because social score is pretty critical there, and if you do the wrong thing, your face is there on the system. So basically, you can be tracked suddenly.
Going back to that facial recognition thing. Say someone, jaywalks or something like that, or you get pissed off at some guy and you flip him off across the street, and that camera is going to be pointing right at you, and all of a sudden you get a demerit on your social score, and then you can't get that home loan or something. It's circular.
Yeah, you can certainly build a series of arguments as to how all those things could fit together. The question is, would they do it? Could they do it? Well, they could do it. Would they do it? I think here, my own read of the situation is that the retail banks are such a large part of the economy at the moment that all the strategy has been to support liquidity to the retail banks rather than actually going around them, right? And I mentioned this change to the lending standards. My own theory is, as part of the retail banks being allowed to effectively give these repayment holidays, I think there was a quid pro quo done, quietly. Say, well, look, we'll deal with responsible lending issues and make it easier for you. I don't see any intent at the moment from the Reserve Bank to start directly injecting liquidity into households now. But again, you got to think down the track, right? You got to think about the capability. Well, yeah, digital face recognition, all those things. And then secondly, what if the money creation processes and yield curve management process only lead to the same results that they've led to a decade ago? Look at Japan, look at the Eurozone. That didn't work. Yeah. Why would this be any different this time? And if that doesn't work, what do they do next?
Yeah, that's my argument. Yeah, that's my argument here in the United States. When now I completely agree that the central bankers, including Jerome Powell and the people at the Fed, they really are very reactionary. I don't think they understand the system even as well as we do. Some people here on YouTube and the guys and gals on FinTwit that I talk to, they probably understand it less. But they're the ones that have all the control mechanisms with the interest rates and the bank reserves. But if they're kind of reacting to this, I would at least give them enough credit to say that they would be cognizant of what happened in Japan. And if they're saying to themselves, okay, Japan tried to create inflation, they didn't. So let's take a few of these 900 PhDs that we have working here at the Fed and have them try to figure out why Japan couldn't create that inflation. And if we need to create inflation here to bail out the government because they're 27 trillion in debt, then how on earth would we do that? And of course, that comes right back to injecting money directly into the system through UBI and making sure that it's got velocity and everything that they need to continue to kick the can down the road. I mean, I'm just thinking that's the end game. And of course, there's no certainties, there are only probabilities. But I mean, if someone just waved the magic wand and said, okay, George, Martin, bam, you guys are in charge of Australia, the central bank, and this is your only job to make sure that the housing market stays inflated for as long as possible. And let's say that you and I had no moral compass whatsoever, we had no ethics, and we were just completely brainwashed by these globalists or central planners or whatever you want to call them. And we took the job. I mean, if you and I were sitting there just strategizing for a week with a few whiteboards, I mean, I think that's pretty much where we end up.